Stay bonafide. Yeah. Man born in a maze where dreams die slow. Soul got rhythm, feel the hum in the flow. Pitch black nights, no stars, just cold. Heart like fire, but the world so froze. Rat race, life's a track, me dash and grind. Eyes on the prize, but the past so blind. No shortcuts here, straight mind over mind. Grit in my veins, hustle refined. Underdog vibes, intuition my guide. In a world so loud, trust the quiet inside. Haters throw shade, still walk my stride. In this game of life, staying bona fide. Pressure cooker life, but I stay so poised. Ignore the fake chatter, that background noise. Gut feeling sharp, no time for ploys. Cut through the fog, making power moves, boy. Tell the odds what's up, I'm destined to win. Counting fame and blessings, not just Benjamins. Dodging fake friends and predatory grins. Tunnel vision clean, eyes where the end begins. Underdog vibes, intuition my guide. In a world so loud, trust the quiet inside. Haters throw shade, still walk my stride. In this game of life, staying bona fide. 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 Yeah. Staying bona fide. Staying bona fide. Staying bona fide. Staying bona fide. Brain cells racing, hearts high stakes. Optimize and dodge quick breaks. Timing sharp with strategies might. Team combos bring balance right. Mapping lanes we execute. Base defense and swift pursuit. Micro, macro, every play. RTS dreams lead me away. In the fray with laser sights. Team fights heat up starry nights. Every command needs sharp finesse. Brains and clicks under duress. Surgeon, Terran's might. Crafting plans deep into night. Echoes sound of victory. Scripts of war in history. Synced up moves like lightning flash. One wrong slip and dreams might crash. Precision marks each bold demand. Alliance strong, we take a stand. In the fray with laser sights. Team fights heat up starry nights. Every command needs sharp finesse. Brains and clicks under duress.
We back in it. So, let's see what's going on. A couple of things to keep in mind for this week and future is going to be the carry trade, the infamous Japanese carry trade. There's been a reaction to it happened before. The carry trade, let me see, when was the last time? When was the Japanese carry trade? Let's go with the assist here. 24. Okay, so there we go. I mean, we can actually look at the date here. So what is it? Let's get an idea of what it is first. Basically, it's foreign investments in the US, and in Japan, they have negative interest rates, or they had at the time. The flip was basically it went from like a 0.1% to 25, and they didn't like that. But what happens is, as an investor in Japan, you're essentially given money to borrow money, which is completely backwards from our general conception of borrowing. And let me just kind of pause that. And what happens in the end is you get overexcited. You want to borrow, you want to borrow, you want to borrow. You use the yen, convert it to US dollars, and then start buying on the market. Now, when it becomes less easy to borrow money, aka interest rates are high, higher than what you're used to. In this case, they're pretty low still. But when that happens, well, now you can't continuously borrow money to feed that continuous trading, buying in the stock market. So we got to identify first, where did this money go? And now that the interest rates are higher, people are going to start retracting their money. They're going to basically sell everything that they bought, try to get as much money back. And in the process, the sell demand or the selling pressure on the market increases. So this happened initially August 5th, 2024. Let's see the effects of that. I'll go to the daily charts. December, November, July, August. So here's where that happened. Look at that drop. We went about a 10% drop in a single day. 8 to 10%. Oh, not a single day, 3 days, if not four. This was the first sign that things were getting a little wonky. But they didn't even undo the majority of that trade. Only a slight amount, and I think it was about 30 to 40%. Excuse me, had to clear my throat. And with that in mind, when everything kind of stabilized, the government stepped in and told Japan stop doing that, right? They didn't want to affect the market too much, and we came back up. So this kind of movement, the return from the carry trade and the bullish incentive, also encourages a rejuvenation of that trade. The interest rates were halted. They didn't get risen, grown, whatever the word would be. They stopped at zero point 0.1. And that was initially when they went from negative to positive, and literally that, just that zero point 0.1. That's the August value that they changed it to from a negative interest rate. So that became, okay, we're going to give you money to uh, borrow money, but now with this flip, now they got to pay 1% of what, or 0.1% of what they borrowed. If that made them a little bit fearful, it'll continue going, right? So the zero point 0.1 to 25% caused that drop then in August? Well, it's happening again. It's in the air. And it's a case for taking a look at what's happening with the USD to Japanese yen values. So here's kind of the lead off, right? The strength, and you can think of this again as a fraction, as per mentioned in previous videos. The USD is on the numerator, the yen is on the denominator. As the denominator decreases, you're going to see essentially a movement up because you're dividing by a smaller number and your overall value increases. Now, this is the opposite. This is the dollar decreasing and the or it's one of two things. It's either the dollar decreasing and the yen increasing, or one or the other. When the yen grows stronger because of those interest rates, people go back to yen. They sell off, and in that case, they sell the market. So you can see the exact trigger when it first started going down and then continuously affecting the momentum of that market. So, in the same light, we've been kind of going down again from this point since January 14th. So, that trade has also, the yen trade has also it's basically doing the same thing in a slower slope. It's not as drastic, but the trend is continuously going down. It could have also contributed to this flat top in the market. We had the higher high here, and then a lower high, but then we had another higher high, and then that dropped. Um, it's showing that the money in the market right now, the liquidity is evacuating. It's leaving. This is a huge dip too. I mean, if you really take a look at that, that's a 5% decrease. It's almost similar to what we're gonna experience before. So we might have another 5% downturn. But that could also trigger other factors, though we did fill in the gap here. So that's a nice thing to look at to say, okay, we filled the gap, but we didn't bounce back from that fill. So the gap was right here. We are stabilizing in the gap. So that's at least one positive, but we did reach below it. The wicks are kind of playing part here. Before those wicks showed a sell-off at that location, but now it's a buy-in, which is a good thing. So there are goods and bads right now. We could be at the bottom of this particular cycle unless something drastic happens to the interest rates in Japan. They get higher again. But fear also can play a huge part. This is a huge downturn, and it could prompt more selling from institutions, from any Japanese investors, whom you got to think of it in two formats. One is this carry trade is going down, the yen is getting more attractive to go back into because either the US dollar is getting weaker or the yen is getting stronger, one or the other. So if that is continuous, then the stronger yen in relation to the dollar is going to motivate more investors to sell, go to dollars, and then transfer the dollars to yen. And continuing the downward trend, also continuing the sell-off. So it's a cause and effect. Um, so we gotta take a look here. USD JPY drops below 149 is rising. Japanese yields starts fears of another yen carry trade unwind. Bank of Japan signals intervention. So that's red flag. If there's an intervention, it's probably going to be a rate hike. The Aussie dollar to USD revisits 0.64 mark. So since this is also a case, there might be a correlation with the movement of the USD, since it is in both of these adjustments in Forex. USD Japan, USD is involved. Australian to Japan, to USD, USD is involved again. So let's take a look at what the stance is. Last week, paired drop below. BOJ intervention could widen the US-Japan interest rate differential, and that's another case. The interest rate differential is what's making the trade happen. The larger the difference, especially when it's a lower value in Japanese interest rates, the more appealing it is. But if Japan increases rates, it gets closer to our rates and closes that gap. Sharp rises in Japanese yen yields could trigger another yen carry trade unwind. Yen best performing, okay. Beyond Japan, US trends that use common focus, upward trends in the respective. So there's no definitive action, because if there was even a definitive choice that the Bank of Japan would raise hikes again, interest rates again, then we would already see that huge effect of a larger downward trend. So either someone knows something we don't, and they're selling off before the huge interest rate hike, or that's just speculation and fear, and we're going to bounce back up. But most of the time, you got to consider. I mean, that bar is huge. This bar is huge, and then that bar is huge. Those two bars really make a huge influence here on the psychology of the trend. Now, we're not too far from our bullish channel. While normally bullish channels will exit up at some point, they do tend to go through and go up and down. And it's a little bit weird how this one's working. Normally it's like a step down, step down, step down, step up, step up, step up. This one's like we go up to the top, and then the next day it's a complete sell-off. And then we go back up to the top, and then the next day it's a complete sell-off. This shows me a little bit of caution because that sounds like, and all these gaps that you see here are gaps happening from pre-market trades. There are certain individuals that have access priority to that trade. And in the end, we have to be very careful because if we see this too much, especially staying within the bounds, then it could be intentional selling to a certain level to stay within the trend to not get everyone too scared, run it back up, scare people or sell off amounts that they can liquidate and get out of the market with at a higher price, and then catch itself back here and do it as much as they can because they'd rather sell and completely liquidate at higher prices than they would at lower prices. So an instant drop is a huge sell-off. Someone's leaving the market, especially in pre-market. The lower volume, the more effect it has. Uh, but still, day trading, when you're in during the day, you still get like millions of shares being traded. It could be a couple 100,000 trades in the pre-market. And then it takes work to get it back up. So the bots are buying the gap, they're going up to the top of the trend, and then boom, another sell-off. So because of these consistent gaps over and over, something to me is fishy. Now, we did make a higher high and then continuously sold off from there the last 5 days or so. The market is open. So now that we kind of understand the carry trade a little bit, it's really time to see if we're going to bounce from here or if we're going to make a lower low. If we do make a lower low, you know your boy's going to be shorting down to the next support around 582. The previous gap fill, which I don't think we filled yet. Oh, we did fill it. We did fill it. It's a bit from before, but because of a fill doesn't mean that you can just ignore it in the future. It becomes a very critical point. So US dollar Japanese is going back up slightly, and that's in pre-market. So hard to trust that. Here it looks like we're about to make a lower low. Let me get that ready. Oh man, we are going down. It might have been a miss at this point, taking too long to get that set up. When I'm actually streaming, I have to talk, which slows down everything else. So we'll see what happens here. Uh, let me see, let me see. It is catching itself, but it is also hitting that top, and it is looking like it's not even gonna bounce from there. It's not looking very good at the moment. So I'm gonna pick something affordable for the next potential drop. Oh man, it's getting ugly. It's getting ugly. Come on, come on, come on. Load up faster. Being a scalper is so stressful. I don't recommend it. Let's see if we can get it on a bounce. I mean, it is oversold right now, so I should probably refrain for a moment. The RSI showing oversold here. 15-minute pretty sold off, but it still could go. Man, that is it's still it's not very happy to be here. Volume, oop, going forward. I'm just gonna go for it at this point. If I need to sell out, I'll sell out early. All right, so I'm in now. Probably waiting for a stair step down, but this candle is huge again for an open. We may get a stair step down to somewhere at the bottom, 181. That's pretty decent. We'll have to see how it works in that location. If it's gonna be strong enough to stay, or if it's gonna bounce. I mean, drop again. If it's strong enough to bounce, then we're gonna see something like a sideways chop and something very landing like we're landing a plane. But if it just keeps on dropping from here and then the next candle keeps going down and just eats through that zone, because it is kind of weak, because it's a gap fill, it kind of has a missing chance, a missing set of volume inside. Okay, there's a recovery candle. Let's see how it looks like. It is technically building a bullish channel. It's trying to get out of that, but also it could be building a smaller bearish channel inside. So let's see the reaction of this candle. Probably should have waited, could have bought it for cheaper. Yeah, for sure could have bought it for cheaper. But I'm hedged both directions, so it's nothing too crazy. Some stocks I have for calls, some are puts. But okay, a buy up wick, that's not bad. See if it responds to that gap. It's below it at the moment. It is also wicking at the gap too, so that's not good. Okay, full candle up, 5 minutes, but we still got 4 more to go. So normally, if we have a 5 minute candle, the first minute, 2 minutes are going to be pretty intense, and then it's going to correct itself. And the last four, last 2 minutes, normally one even. So that's a nice wick. It is a good buyout. Japanese yen not really responding in the current opening. We had a decent pump up. Yen got weaker, and now it's kind of like going downwards. So I don't trust the beginning of a candle to make a decision. I always wait for the end, especially on like a 5 or 15 minute. We're still on the 5, and there's where that wick's forming now. So the sellers are stepping in. If that wick goes and basically becomes the space inside of this gap, this highlighted gap space, and that gap becomes resistance, then the next candle is going to be straight down. It's going to be a lot of volatility, man. This is insane. Absolutely bonkers right now. No, it is building a bearish as well. And it's exiting below now. They didn't climb enough to really get a good buffer zone between the bottom resistance of this zone. So it might drop through, considering how volatile today is looking. Could be a wick. If it's a wick, a continuous maybe 3 candle wick, then it could recover upwards. Hmm. Okay. A couple of other things. Let's check at Oxy. What's oil doing right now? Ooh, same thing with oil. I mean, oil has had quite a run for a while, but it did just make a lower high. And it's continuously making lower highs. It is technically, if you don't see it, draw the line, but it is bouncing off the actual like bullish exit here. So it did exit correctly. It did even go down and touch base on the top, changing it from resistance once, 2 times, 3 times, now broke 4th time. Then it confirmed the resistance and it did it again, but in the process, it did create a lower high. Sometimes you'll see these channels actually very obfuscated. You see this right here. Be like, oh, but it's up. It went up. Don't you, isn't it always going down? It broke up. Well, yeah. In this case, the bearish channel is going to always break down eventually, but doesn't mean it can't leave for a moment, especially in pre-market. It looks like that was a pre-market pump. Easier to manipulate the market in pre-market. And then they try to keep it up here and then eventually gave up. Re-enter the channel. You can see some of those particular critical points. Oh, I moved it. Critical points here touching just like it was touching here and here. And then this candle just dropped it out. So eventually, yeah, you can see like these little fish or a dolphin jumping out of water a couple of times, but eventually that dolphin's going to go down in the opposite way of that trend. So if the trend's going up, it's going to exit down. And so similarly, if the trend's going down, like the bigger one here, it's going to exit up. And then it's the question of whether it's going to stay up or if it's going to be a dead cat bounce. And that's kind of how you measure the overall market continuously. Super simple. I don't like to go crazy with indicators. I like to check the strength of indicators for sure. and then follow those channels because those are going to be, in fact, I see two resistance taps, so I don't think I'm aligned very good. I think right here is a better alignment, something like this. Because I tried to tap it, it confirmed resistance, try to tap it, confirmed again on the resistance, got denied to re-enter that channel. So that's super weakness, volatility included. Oh no, we dropped below. Okay. So we did end up going within the channel. The body of the wick is below the previous red. So yeah, good huge red candle, good recovery, but I would expect it to hold a bigger green candle and or body of the candle in order to really reverse this one. But it was below it right here. That's where it closed, and then now it's dropping again downwards. So re-entering bad territory. Volatility can do quite some things. Trading in the early times, you're going to see a lot of volatility. We also got denied on the RSI for a trident breakout for a bullish run. You can see that right here. It completely denied itself. Boom, barely even touched it. And it got denied here a couple of times. We tried to come back, got denied again. So it's looking like 5 minutes going to go down, 15 minute. It's fighting. But notice the wick, the top wick and the bottom wick. It's very indecisive when it doesn't have a solid structure. It's called a doji. It's not a doge. It's not a crypto coin, rather DOJI. It's an indecisive candle. You can't tell whether it's going to go up or down, but you can normally check the previous trends and consider the probability it's going to continue that trend down. So if there's no significant reversal candle, then we might re-enter our previous bearish path that we should be going down on. Let's see. According to Lewis Christopher, one of Australia's most recognized, respected property analysis, history shows us that when the RBA moves on rates, they rarely stop just one. It's a pattern, okay? So that's really the most we need to go through this. I can even throw in a little AI explanation for simplicity. Olama Ron Mistral. Explain the carry trade metaphorically as if I was 10. All right, let's imagine you have a lemonade stand on one side of town. We'll call it side A. That's creative. Lemons are cheap because they grow in abundance there. On the other side of town, side B, people really love lemonade and are willing to pay more for it. You decide to buy as many lemons as you can from side A because they are so cheap, hence the Japanese cheapness, yen cheap. Now you have a lot of lemons, but no lemonade yet. You take all of these lemons to side B, there where people are willing to pay a higher price. Here you make the lemonade and sell it at a higher price than what you bought them for, or what you could actually sell them for back on side A, on your side. The profit you make from selling the lemonade interest is more than what you spent on the lemonade, the borrowing cost. However, you still have all those lemons in your inventory. If you want to keep making more money, you need more lemons, which means you have to keep going back to side A, borrowing more lemons. But there's a catch. Sometimes the price of lemons on side A can go up, aka the interest rates of side A, Japan, can go up. Side B is basically the United States market. Order demand. There it is, order demand. So it's two-sided coin there. Order demand for lemonade on side B can decrease. If this happens, it could become difficult to sell your lemonade at a profit, and you might end up with a lot of unsold lemonade, a loss. In finance terms, the cheap side where you borrow is called a low yield currency or asset, while the high priced side where you invest is called a high yield currency or asset. The lemonade represents the return on investment, and the lemons are the cost of borrowing. Just like in our lemonade stand, the goal is to make more money from your investment than what it costs you to borrow. But always be aware that there's a risk involved because the market conditions can change. Big, big risk. If markets change unexpectedly, like maybe Trump tariffs, then you're going to experience a little bit of what we call turbulence in your strategy. Okay, good wick down. It is eating up the resistance there, so good solid recovery, decent bottom, 15-minute. Still a bit of a doji. It's on the top side, so we could base here for a little bit. We have to get above this factor here, the closed body of the green doji candle. If we can't, then we're gonna build a channel down. Though, let's see if there's any other channels in here that we can identify. I kind of want to. We did fill the gap. That's important here. There's a smaller gap here that was filled. I kind of see, but it's very messy. I kind of see a smaller bullish here, but it is still trying to go up around. It's not, and you one, two, yeah, see, and it kind of moves around too much. So there's no nice. You need to get at least 3 points that are touching perfectly, or a decent estimate for algorithms. And this is not just, oh, it's how it works in the market. It's algorithms. They base themselves on the number 3. Um, on a third hit for resistance, you're going to see a breakout. Or if there is no 3 candles, then the trend breaks down. So 3 is a very big number in quantitative analysis. And it's basically programmed into most algorithms when they're checking. So 3 of these make a trend go down, 3 of these make a trend go down, but we're seeing smaller channels here. Like the small channel go up, breaks down, and then it breaks up, and then it breaks down. So that's basically the up and down of a market on the smaller scale. It also follows this trend on the bigger scale. See, there it is. There's your 1, 2, 3 candle confirmed trend, then breaks out on later afterwards. These are on the 1 minute, so they're very direct. But then it's all about the strength of this candle. Is it going to bypass? Is it going to get above the last one? Is it going to make a double top? So those are the pieces you're looking for. All right, I could throw in some music again. Maybe check. Let's see DXY. DXY is getting stronger, so it must be the comparison of the dollar to all the other currencies. And the comparison is that the dollar is getting stronger or the other currencies are getting weaker. What about our USO2 interest rate divided by US 10 interest rate? Yeah, daily. Well, it's kind of there, but it is fulfilling the trend of this particular. It's a daily trend too, so that's not good. It's expected that it's going to break down at some point. It looks like it's trying to get above this resistance. It tried a little bit. It succeeded twice, but failed after. And now it's going below with the next green candle at the end here. That would mean this resistance is winning. And normally time is your friend here. If you find a trend here between these two timelines, you're looking to see if older timeline trends, technical indicators, resistances, supports, longer channels, bigger channels, if they're gonna actually win or if the short-term trend is gonna win. If the old one wins, meaning the resistance gets denied here, and this candle cannot go above and can't close above it, then we're gonna return to where this particular downward trend was being created. However, if we can break above this resistance here, then we can reverse the trend. Otherwise, we just got a dead cat bounce, and we're potentially going to re-enter this longer downward trend here, which would mean a huge down. huge down. This much, right? So that's gonna be an interesting watch there. Let's see NVIDIA. How's the semis doing? It's okay. It's responding to some trend lines. It's actually catching itself on a long term. Oh, on the megaphone, technically. Well, this was my prediction. Interesting. This was my expected process here. Thought it was gonna get denied here. It was gonna go down within the trends and play around, but that looks like it's not happening, which is fine. Happens. I like to draw predictions and see if I can accurately depict them. So I'm gonna remove those. But there is a particular trend I did draw that is manifesting, and it's this one. Can't tell if it's here. Let's grab some close indicators here, like this top. Actually, here. Yeah, it seems about right. Touched, third time. Now, since we keep visiting down here, there's a chance that we could go up and then break back down. But notice the gap fill here, it happened. So all this empty space got filled in this upward movement. But in the process, it keeps making lower highs, which is not good. Well, AMD is supposed to be a competitor now with NVIDIA, but that's not even that strong to maintain the full range of the channel. It's not good. Man, that's a down. It is a breaking below. I mean, technically I didn't align it right. It's gonna be something like this here. So yeah, for sure broke below. The more candles you have, the better you can align your trends. So sometimes with a couple of lines, you can guesstimate, but the longer that trend goes, the more you can adjust and create a more accurate channel. What about AMC? What's that sucker doing? Fulfilling? Give or take. It's in the bigger trend here. Channel. So expect it to break up, but it could go down further before it does break up. Kind of breaking our double bottom or head and shoulders now, so that's potentially invalid.
Man, born in a maze where dreams die slow. Soul got rhythm, feel the hum in the flow. Pitch black nights, no stars, just cold. Heart like fire, but the world so froze. Rat race.
Oh wow, my ex actually streamed. That's nice. I should probably do that more often. Also multi-stream to X on top of everything else. Okay. The earnings was a downward pressure, but there was already downward pressure before it. So again, if you haven't seen my previous videos, my interest in AMC is this particular location. This huge pump here. If we go backwards in time for weekly, this is... no, is it this one? hold on. No, I'm not there. Oh, there we go. See, because this is the old time, 2021. People made a ton of money. You had a huge candle here. It's kind of replaying itself again. Notice this. Huge candle here, bigger than anything in the past, right? And then it dropped down. Great, it dropped. But then it kind of based. It couldn't drop forward more. It couldn't go below anymore. And then it just blew up again with even lesser. Like it just went from 50 bucks and it was a pre-split. So this was actually like 14. I remember entering at 14, leaving around 50. I could have left it 75, the top, but I put 50, or I left 50% in, and I took 50% out, so I made half my total. But the huge candle is a huge signal. Something's happening. Something is stirring up this location. So I'm like accumulating AMC within this area right here. At least at the current prices, because I'm expecting something else to happen again here. Now, my interest is not these candles. This was the past. My interest is this new candle that popped up recently. And look at what it does to the previous candle. This was huge. This was already millions of shares, about 400 million. And that was unheard of because mostly it'd be like 8 million, 10 million, whatever, 5 to 1 point something, like 1 million minimum, 10 maximum. And all of a sudden it went to 400 million. That was my interest. Then we see this sucker, and it makes the previous squeeze look like a joke. This one is actually 1.7, come on, 1.7 billion. It's in the top left corner underneath the red sell and the blue buy. That's crazy. To me, that's insane. And that popped up out of nowhere. Like you can still see millions of shares being traded, and then it increases, of course, 100 million, 180, 90, and then boom, 1.7 right there. So that candle really got me interested again in AMC. And it's doing the same thing as we saw in a very, very lower value, or at a much lower value. So it popped up and then it's basing. It drops a little bit. And then there's this area here that it's maintaining. It's not going below this value. And that's where I bought last time, where it's trying to go down, but it cannot, it doesn't have the pressure. On top of that, the technicals are sound. We've got a very low bottom and then a higher low. That's interesting to me, especially after that huge blow up of 1.7 billion shares traded. That's insane. I don't even know if there's that many shares in the market, to be honest. Let's see. We go to our market watch. Let's see what the float is. Look at that. The shares outstanding. Public float. The public shares right now in AMC is 380 million. How did we just trade 1.7 billion in a week? That would mean that all week it was just moving the public float back and forward. That's ridiculous to me. So yeah, there it is. That's what's really breaking my focus back into AMC since 2021. GME. That one's more, I would say, fundamentally sound lately. I do see that similar huge set of candles happening here, but that's multiple. Got bought up from 10 bucks. It went to 20, 25, even went up to 63 and then cooled off. And now it's doing the same thing. It's basing. We got a lower, I could call it a bottom because continuously looking at it, it just keeps making higher lows. Right? That's a sign that people are buying in at these prices. The demand is high. So in a way, I'm also looking at GNE, curious about both, and just kind of accumulating for that next potential burst. At least fundamentally, GME is more safe. AMC has been, I mean, look at the amount of earnings returned here. Green, 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 green. And then two reds. All right, fine. You know, we're having some economic issues, so that's understandable. But we're looking at AMC. It's mostly red with like a couple of greens. Well, okay, it's a little bit better. It's not as bad. So it's kind of half and half, really. We're expecting to see what's going to happen next, which actually is next week. No, next month. End of next month, we're going to see some interesting earnings that could hype the stock back up. Oh man, crazy times again might be happening. 2025, another short squeeze potential. Just like 2021. That was a crazy time, man. So, okay, we're basing. See, we showed strength here. Now we got to get above. We got above the daily high, which was not very impressive. But we do have to see what happens with our previous trends. Now, what's a strong trend I can put here? Well, this one touched 1, 2, 3 times here, so I can kind of lower this here. This one hit up, and up 3 times around here. Not only that, but it based a little bit here, flattened out, and then it went below, tried it again, broke, down, and then tried it again, and the wicks really show me some weakness here. So this is actually a much more difficult location that we're trying to watch for, and that's not too far away. If it can bypass these, well then we gotta check the channel that I just moved. We gotta check to see if that channel is gonna get entry, if it's gonna give entry. Problem though is that we did create a lower low today. I mean, yesterday's low was pretty low, but now we got a lower low. However, it could be a doji candle, and on the daily it could end up being basically a wick, just like this, but it's still a doji looking candle here. Undecisive. So we do really have to take a look and see what today is going to happen to be. But I'm already into a short, so we'll see how that works out. Oh, let's see, what else can we think about? Oh, Japanese yen, all that jazz, the carry. Alright, that's a carry, right? That's one thing. I always like to see what the sentiment is on YouTube as well. Use my other browser because YouTube doesn't like that one anymore. The ad blocker really didn't work well with YouTube's algos. Morning live, Trump live. Let's do some video summarizing Trump live missing gold reserves. Trump on missing gold? Okay, that's something to be watching right now.
But he had this incredible ability. He could barely walk in the sand. Somebody thought he looked great in a bathing suit.
Oh my god, he's being entertaining, not informative.
And he'd walk in the sand pulling a thing that weighed about 6 ounces. You know those aluminum? See, aluminum's very good. A child, it's meant for children and very old people to lift, right? So he would put it down, and he'd put it down.
Oh my god, he's being a comedian. I get it. It's entertaining, but I need some information. Let's do live trading, market crash, inflation report, and payday Friday. Matt Kors does a pretty good analysis on the market, especially with options. Actually, that's a good point. I didn't check on options right now. Not on this browser. Too many browsers to account for. Options strat. Let's see what those look like. Okay, AMD is looking slightly bullish, but we got to match it to any bearish flow. AMD, one of one, so that's decent. AMD bullish, that's probably what we saw at the bottom of that trend. AMD might be coming back up. This candle might base here at the bottom of this like all the others have. And then it could go in the top of the channel. Well, it'd be like 137. That's a big money. That's a $30 difference eventually get up there. Maybe. I don't know if that's enough money for that to actually do, but it's a consideration. Micron, semiconductors long. That's going. PayPal's going, but decent money. PLTR, huh? Let's see what that's doing. That one's the latest meme stock. Government funded company that just broke down from 120 to 80. It lost $40 in 2 days. So I don't know about this one. It is basing, so it could be just a trend bounce, a temporary one. It's going to base here, bounce off of the previous resistance. Now it's going to be temporary support, which means in the next week it could bounce back up to potentially up here at 110, make a lower high. It's more, that's a decent range, but that's a $30 upside in a week or two, so that's a pretty decent call there. BP Oil, PLTR, TQQQ, Ultra Pro, Google. No shorts in the market. However, shorts on NASDAQ are okay. PEP, buy, MT, on holdings. Nothing crazy on the short side, for sure. Let's see what the bears are doing. Microsoft bears, Uber bears, Apple bears. Oh, they're bearing up the the Magnificent Seven, as they call them. But then Google is getting a boost of about $1 million. However, Microsoft is getting shorted for 5 million, Apple another 5 million, QQQ getting shorted directly 36 million. That's not a good sign. Not a good sign at all. So the bears are definitely on the prowl right now. BAC, Bank of America, getting shorted too. Wow. Longs, Granite shares, not sure what that's about. SoFi, App, Hims, CVX, SoundCloud, or SoundHound, GM, General Motors. So the biggest actual share, live cattle is being shorted. Deflation. Ooh, that's a big key there. With all the chaos happening with what's the word? Tariffs and all of the money that's being recovered from irresponsible government spending, that could lead to a deflationary environment. And in that case, if people are shorting cattle, it means they're expecting meat to be cheaper in the future. Cattle meat specifically, right? I mean, livestock would all be everything. Uh, but yeah, no, Microsoft huge short. I mean, QQQ just a huge short. What's QQQ doing? Oh, Dumpy Wumpy. Well, that's actually on the weekly. Let's see on the daily. On the daily, it's doing its thing. It's doing similar to what the SPY is doing. Basing at this location, having trouble going above the daily high. Stagnating. And here it is, another bearish channel forming on a bigger. Well, that's 5 minutes. That's not too crazy. 5 minutes here. It's going to break down, but it could break down, bounce at the resistance down at the bottom of this channel, this highlighted green area, and maybe bounce back up. Potential, right? Those are the potential directions we can expect here. Probably should have went long just for this particular reversal, but still, the overall is going to be bearish, so my short's still going to work out. Very interesting, though. Very interesting day. Now, those wicks are very dangerous. Continuous empty wicks on the upward. So this huge wick here, this wick here, it's just not solid. The range is important. From where you begin, go down, up. That's a huge range, and half of that, if not less, is a body. If you want to see strength, you're looking at full body candles with very small wicks. This one's huge. I mean, this one's really telling me that the main direction here is bearish because that got accepted so much, so well, with very small wick down here. But then it got a reversal, technical reversal at a quote unquote bottom, local bottom, not a max bottom. And then it continuously has wicks on the upside. As higher it goes, the bigger the wicks. And now this wick is coming with a red candle, not a green one like before. So this one was bigger body green, smaller wick. Then a smaller body green, bigger wick. Now we're not even a body green. We're a red body, potentially going to close in 3 minutes. And a still large wick above. So that's telling me that there is basically trend following, but the trend is not very strong, and the general direction is going to be down because, again, these upward channels break opposite. So for sure, we're going to revisit down here, potentially break down, because if that's the case, we've got this resistance here and my break. There's a lot to watch. Uh, but I feel like we'll see. I mean, again, I did kind of assume this too early in the candle. It's only been, I only got 2 minutes left, but the end of that 2 minutes, normally it's gonna break in the direction of choice. The thing about it is they kind of work with like machines and algorithms and institutions generally. They work with most common candles, especially for scalping. The 5 minute is the most common. So knowing how many people watch the 5 minute, they can play with the candles within a specific range and specific trends. So if you're expecting it to go down the first couple of minutes and you see a huge down, and like I did technically down here, uh, immature traders will react to that candle and sell, and then they'll pop it up. And the opposite, up direction at the end of the candle. And I did kind of get into that trap, didn't I? But that's fine. Small money, small problems. And I think that's it. There's nothing else to really say about the market. It's all about watching it now. There's nothing more to do here. Japanese yen still needs to be watched for patterns. It is getting stronger again temporarily, but it's meeting a resistance. And now we're going to really see what it's going to want to do here. It's going to touch this resistance. And let's see what it does at that touch. Already making a wick very quickly. Going from green. Let's look at the 1 minute. Oof, okay. Yeah, big wick, flat top on the bodies. Huge resistance. If that grows beyond the size of the previous candle, there it is. It's going to reverse direction now. Unless it, there it is. And then it goes smaller. And then it goes larger. Whichever one it closes on, really. We got a minute for this candle. Oh, okay. Well, that is a return to the trend within this upward channel here. and it closed underneath. That's not good. Or it opened up underneath the previous. There, up, there we go. Now we should exit out, down. That's the thing, right? We just wanted to touch. That's what the algorithms are doing. Hey, we're buying at the bottom here, and then we're going to touch this up here, and we're going to see what happens after. They're going to buy down there, sell up here, and then wait. Those are the scalping algorithms. Buy low, sell high. That's kind of the real way you do it. Not buy high, sell low. And algorithms are fine-tuned to basically do this. And when they all work on the same algorithm, then they basically fulfill that journey. They fulfill that expectation. The more eyes on the same technicals and the same values, then the higher chance those patterns are going to get fulfilled. And that's the case for psychology too. Even when it's only people, we watch these lines. I've drawn these lines, but I'm not the only one that's drawing these lines. So that's a consideration here. One moment. Had a quick call, but the channel is fulfilling. We're bouncing down. Now let's see what's gonna happen with the bottom side resistance here. I don't see it as very strong. The only reason it bounced up is because it created this smaller bullish channel. That's kind of how it's been moving. It's been moving through bullish and bearish channels, trying to not drop as much on the way down and trying to go higher on the way up. So, and it might be even making another one here. Maybe. It's not clear just yet. 5 minute. Oh, that's a big red again. Big red on the 5. Doji coming up, indecisive. might continue the downward trend. Anyway, that's really all I'm gonna work with here. We saw the options, nothing changed. Micro, Micron, TQQ, Pro, Ultra Pro, strategy, sweep, split. So it might just be a sideways chop day. It's seeming like it's going to be a sideways chop day. I don't think we're going to get another drop, which would kind of formulate a good bottom for the previous day. And a sideways chop will basically be a doji. So potentially, if we can get a green doji, might be beneficial. If we get a red doji, you might want to watch out. Those are just the general directions. But it's not a very strong candle. That's really the case here. And it still has a chance of dropping so close to the bottom right there. It could just be volatility on the open. So maybe in the afternoon when all the trading cools off a little bit, we'll see a organic direction choice. So that's it. I'm gonna change streams.